We're going to look at some trader education at momentum studies. It's about riding the big impulses to the upside. As I say, we're in a world of markets that exhibit historic swings. As traders and investors, we must adapt. We have to be flexible. Always have to look at what variations of tools do we need to use that are best for our technical analysis based on the existing conditions. I have been a trader now for 46 years. Became a CBOE member back in 1974. So I have seen a massive amount of changes in the markets and always needing to adapt as that happens. Over the last many years now, momentum has really been king, especially for traders, swing traders, those wanting to catch the big swings in the market. And as I speak to my traders, my clients, and in my videos, I always say that the biggest success comes from positioning ourselves with the momentum, not fading it, not standing in front of that moving train. We must catch those and ride those big impulses to have bigger wins versus losses and more wins versus losses. That's the key to success. So I'm going to show you two indicators that I think will help you with that. We'll do this quickly, so just so you can get a sense for what this means. I'll look at a few symbols and you'll get a good sense. Two momentum indicators that we're going to look at right now. This is the S&P 500, and we're looking at momentum breakout bands. They're called MOBO bands, and these are fantastic indicators of momentum. So when you look here at the S&P 500, you can see as we're looking back here 6 months, of course, we had an up move going up here last year, and then through the early part of 2020, they had some wiggles and some topping in here, and then when it turned down, you can see what happened. Now, what is a MOBO breakout band or momentum breakout band? This is essentially a sister or a cousin to a Bollinger Band. Bollinger Band is a band that widens and narrows based on volatility, and it has a center line and two standard deviations in either direction. Momentum bands essentially take 8/10 of a standard deviation. So when you see it red like this, it's trading below the bottom band in a much narrowed Bollinger Band essentially. When it's trading like this, it's trading on or above that band in that Bollinger Band. So it's 8/10 of a standard deviation in either direction, up or down. So you can see the value of this when you look at momentum. It's incredibly powerful that it gets you on the right side and you don't make as many mistakes and you can catch the big ride. Let's just look at one more stock, Apple, and I'll show you that one. And you will see a similar story as you look at that. Of course, Apple's a market stock and heavyweight in the indexes, so this would look a lot like the S&P 500. Now, I want to change this up a little bit because this is a fantastic indicator, but it's not my favorite. My favorite is the one that I developed called the slim ribbon. So I'm going to go back to the S&P 500 for a second, and I'm going to go into studies right over here, and I'm going to edit studies. And instead of using the MOBO breakout band, which I'm going to get rid of right there, I'm going to change this to the slim ribbon right over here, and I'm going to add that to the chart. Now, this has got some great programming in it. First of all, you can see that it colors the bars, similar to what you see in the MOBO breakout bands. It then gives you these signals as to when the momentum is positive or neutral or turns negative. The widening of the band is a signal of momentum increasing, and you can see that going on right over here as it was negative and had the big crush. You would have been told to be on the short side or not to be on the long side at 3,200, and you would have been on the right side for 1,000 points. Here's where it turned positive here as the bands got very wide and then turned upward, and you can see in here it remained positive the entire way. all the way up to where it is now. So this would have been about a 700-point advance, 600-something point advance that you would have been on the right side of. Now, I'm a cycle analyst, but I'm not looking at that at all, because what I want to discuss is the importance of momentum and how you can improve your trading and investing. So what I want to do is just change this up a little bit, because I think that there's even a better way to see this that is far more stark. And again, we have programming in here that is showing you when it's positive. I'm going to go into style, and I'm going to change this to an area chart. And then you can see how this plainly screams at you when to be on the long side and that be your bias, when to be on the short side and that be your bias. So it looks pretty clear in here. You can take a look at Apple. As I switch this over, let me just go to Apple, and you'll see a similar thing right in here. Of course, Apple does look like the market. But what I want to do now is I want to change it up a little bit and let you see a few other things. Let's just look at a commodity. Let's say oil, which has been very volatile. Here is /CL. Could you be given a clearer picture? You can just see that. It did go neutral for a little bit right over here as it had a rebound, and then all of a sudden went negative again. It would have kept you out of trouble or in the profit all the way down, and then when it turned positive here, up at around 25, well, all the way up near here to 39. So just a beautiful picture there when you look at the slim ribbon on an area chart. Let's take a look also and take a look at a few more stocks in here. Take a look at Boeing. Now, Boeing is one, of course, that's had a horrible time. And you can see that way back over here, while the market was still okay, when Boeing had its own troubles with the 737 MAX, well, it began to move lower. It had a little bit of a rebound period right over here, and then remained negative until right over here, right around 142, 145. And now here it is right now today, up $30 at 213. So a very, very good picture of how you can get on the right side of momentum. One more thing in here, or two more. Let's just look at a couple ETFs. We know that the XLE, the energy, has been in a lot of trouble, but look at that. And the clarity of when to be long and when to be short. Again, this is controlling your biases, taking the big ride. These are daily charts we're looking at, but it works also on weekly, on monthly, on intraday. Just a really good look. Note that intraday will be more volatile. There'll be a lot more wiggles in there. A lot smoother when you look at daily, weekly, and monthly. How about XLF? The XLF, they were a laggard. You see, they actually got bearish again right in here, but then as it turned up, the slim ribbon began to widen. It then turned positive again. Look what happened right over here when it turned negative, and you got the whole ride on the downside. So you can see in there how clear that is when you look at momentum studies. If you want to have the slim ribbon on your website, on your platform, well, we have this program you saw is for the Thinkorswim platform. You can go to AskSlim.com to the resources, and you can then put up the slim ribbon. There's a video there, you can watch that. And if you're not on Thinkorswim, it shows you really how to construct it, but you won't have the programming. You'll really just have the 3 moving averages in there. That'll still be helpful to you. I think that's a fantastic thing for you to be looking at and to help your trading in any kind of market, and especially these amazing momentum markets that we are in right now. That is a look at traders education, and I hope that it's helpful to you going forward and you use momentum studies to really raise your odds of success.